to figure out what's going on. So I'm going to walk you through those today. It'll be a review for some of you, but again, we have a lot of new people today because we had an email go out. So we'll take it a little slower than the overall markets today. One of the reasons for that is actually there's two today. We had a very strong retail sales report, and Fed Governor Waller walked back the fact that we're going to get any rate cuts earlier in the year than the market was thinking, probably later in the year than the market was thinking. So generally speaking, we see that has caused the 10-year yield to go up. Generally, when the 10-year goes up, sometimes the dollar goes up. So let's just see what the dollar is doing today, and then we'll talk about the equity market. Yeah, so you can see that the DXY here, this is the dollar index, is also scooting higher as the rates have gone up the last couple days. So that is what we are taking a look at as far as overall macro movements today. So a little bit stronger interest rate is causing a little bit of pressure in the market. So now let's start with the S&P 500. All right, so a couple of things we see here. Right now we're at 47.23. The high was 48.02, so we're not that far from the high. A couple of things we could notice here. We are still holding this trend line. Trend lines have been pretty accurate as showing trade changes in trend. You can see when we broke this one. When we broke this one on the downside, we went up, and we're still holding this one, but we are right on it. So let's take a look, see if we're around any moving averages, and we shall see if we are anywhere around other support levels. So what we're going to do here is I'm going to take this thing off. All right, and the first thing we're going to do is put on some moving averages. We're going to put on the major moving averages, the 50-day, the 100, and the 200. The reason we're doing that is I've already looked at the 5, 10, and 20. I'll put that on there, but we're below all of those right now. So we did break the 20-day moving average, which is could be better for the bulls. I think some traders would say that. Also, let's take a look at the longer-term moving averages here. So interestingly, the next moving average after that 20 is the 50. The 50 is very close to the previous high back in July and August. And we're also kind of interesting in the Fibonacci area where we've been pulling back here. So we're going to take a look at that. Again, we're doing this all on price on the SP 500, but then we're going to use our secondary indicators, all right, to get a little bit of insight under the hood of the market, so to speak. So the first thing we're going to do, I'm just going to take off all of these studies right here, and then we're going to do the Fibonacci here. All right, so there's two places we could do Fibonacci. We also want to look for what is called Fibonacci confluence. That's where two Fibonacci levels from different time frames line up. What that means is two different areas of support that traders are looking for in different time frames. If they line up, that makes it a little bit higher to easier to hold that level. So let's do this one first. All right. So interestingly, the next level, if we want to know if we break this little double top, which would be this the trough right here, there is a little support right under there. Okay, so that's 23.6 from this larger one, which is right around there. Now we're going to put on another one. And the next one we're going to look at is this last move here. This is the last that last low. So we're going to go there up to the top and see if there's anything Fibonacci-wise in the shorter term that might line up with any of these levels. All right, so that's our next task here. So once again, I'm going to start it from here. All right, so you can see here that this is the 50% level. The shorter term is also at the 23% 0.6 level of the longer term. So that means there is an area of Fibonacci support just above the July high. So even if we took out the low there of the double bottom, there's a lot of support even before we get to the July high. So bulls might take some solace in that, although of course support can break, of course. But so that's what we're seeing there. Let me take these off. I'll take this one off too. All right. So that's what we have. The first support is the trough of the double top. And then, as I said, a lot of Fibonacci support before we get in here. So that it's got a lot to go through if it's really going to start dropping fast. Okay. All right. So that is just looking at the index. But we have other tools in this class to help us figure out what's going on. A lot of you are mentioning the VIX. We do have a tool which gives us some market insight using the VIX, and I'm going to pull that up next. All right. For those of you who are new, this is a market timing tool. Nothing works all the time with these market timing tools, but they're all little pieces of information that you can put together to get maybe a better insight of what's going on. What we are looking at here is on the upper panel up here. This is the VIX that everybody's been talking about. As you know, that is the fear gauge, if you will. And what we have on the chart is the VIX is the candlesticks, and we have Bollinger Bands put around the VIX. However, this Bollinger Band is not the same as the default Bollinger Band. This is from Tom McClellan. It's where I got it from anyway. And what we look for is the change of slope of the upper Bollinger Band. The settings for this Bollinger Band are a 50-period moving average as opposed to a 20-period. And one standard deviation as opposed to two. All right. What we see here is that when the slope goes down, I've just put in the last set of signals in here. When the slope starts going down, that often leads to corresponds with a rally. When it's kind of flat, we're kind of flat. And when it goes down again, we get another rally. When it goes up, that slope, we often go down on the market. You can see the last few signals in here. So right now, what is it telling us? Well, it's telling us that we're still in a downtrend, although for the VIX, which is positive for the market, but it's flattening out just a little bit. Let's just zoom in there. All right, so we see that this is flattening. So if this sell-off that we've had the last couple of days is going to maybe continue, this might start turning up, and that might be a signal for some technical traders to get a little bit more defensive. So we're going to put that in the back of our mind. The next thing we're going to do is look at my other market timing tools, and we're going to see what they are telling us today. So we're going to go back to this. All right, so the first thing we're going to do is look at strength under the market with this particular set of studies. We're going to look first at the NYA. This is the New York Stock Exchange Composite, a little broader than the S&P 500. And what we are looking for is the McClellan oscillator. Now, for those not familiar, as I said, we're going to do a little bit of review here. This line right here is the advance to decline line on the New York Stock Exchange, okay? And what you see here is, notice how we're about the same height right here and here, how the advance to decline line is sloping down a little bit more than the market. And what the McClellan oscillator is that it's a measure of the momentum of the advance to decline line. And if that starts to falter, that can sometimes be a bit of a cautionary signal for some technical traders. You can see, I pointed this out a couple of weeks ago when we had the first time under zero, which is the signal for some technical traders with the McClellan oscillator, okay? That's the first time since the October bottom this has gone negative, and we suggested that might mean a little sideways action, a little backing and filling, and that's kind of what we're getting. It's even going down a bit. So that was a cautionary signal. What does that mean? It just means that maybe if you want to go buy things, maybe you buy a little less, or maybe you get a little bit more selective, you know? Just some things to consider. Now we add to this the longer term version. So the McClellan oscillator is a shorter term version. All right. And what we want to do is look at a longer term version of the McClellan signal, which is, this is a shorter term, signal, days to a few weeks. The longer term signal is the McClellan summation index. I'm going to put that up there. All right. The McClellan summation index right here, it's still in positive territory in that it's above zero. What is the McClellan summation index? It is simply the running total of all the values of the McClellan oscillator. And what we like to see in a healthy market is it continuing to rise. Now, it's not falling hard, but it is. You can see the momentum is waning a little bit. Now, the longer term signal on this is if this ever broke zero. You can see it broke zero right here. We went a little sideways and then we started going down, okay? Once it went back above zero, we started going back up. So this is saying longer term, we're still okay, not quite as strong as we were before. But on the other hand, it's still in positive territory, where the McClellan oscillator, the shorter term signal, is saying that we have a little shorter term weakness. So what we have with these two types of indicators is we have a longer term uptrend. We saw that with the VIX signal and the McClellan summation index with a little bit of a shorter term pullback right now. We don't know if that's going to develop into something more, but we can certainly watch some of these indicators to see if they continue to deteriorate. Okay. All right. The next market-based system that we look at here is, do we have any split market signals? All right. What are split market signals? Let's talk about that. So this is a weekly chart of the New York Stock Exchange Composite. And here is the theory on this timing indicator. If you are relatively near a high in the market, would you expect to have as many highs as lows on the New York Stock Exchange? No, I don't think you'd expect that, right? You'd expect we'd have mostly highs. But if you get the same number of highs as lows, then what are we going to do? Well, what we're going to do is say that that is a split market. And if we have over 2.5% of highs, but we also have over 2.5% lows, that'll generate what's called a Hindenburg-Omen market split signal, which we do not have. The last two we had is in October. What you need, and you can see it can show you big declines before they happen, you need a bunch of signals over the course of a couple of months, like 4 or 5 or 6. We had 5 right here, and you can see what happened to the market when that happened. So that is good right now. Okay, so that's what we are looking there. That hasn't given us a signal yet as well. The next thing we need to look at, where are we in seasonals for the market? This is not uncommon, okay, where we go down in this area. So this is the seasonal value, and I've drawn this with, I'm going to do it with 20 years worth of data. All right. Now, if you're not familiar with this is a seasonal style, and this is 20 years of data down here. We can't see it very easily, so we just click on this little thing, go manual, and then we just do this real quick. Not that you need to know how to do that necessarily, but here we are. From the 11th, historically, you can see we're in a seasonally weaker pattern here, and that's going to continue if we go by this chart for almost the rest of the month. So that's the seasonal pattern on the SPX. Now, again, seasonals don't always work, but anyway, That's what we're seeing on that one. All right, let us look at the NASDAQ, and then we're going to do sectors. All right, so with the NASDAQ, we can't use the VIX signal because the VIX is on the S&P 500. If we're going to use that signal, the VIX signal on the NASDAQ, then what we have to do is use the VXN, but it's the same idea, okay? And right now, let's zoom in here. So you can see it's the same thing. When the slope goes up, we're just using the VXN as opposed to the VIX. And here is the NASDAQ 100 on which it's based. You can see it's the same thing. When that starts going up in here, or when it goes down, the market tends to go up. When it goes up, the market tends to go down. Right now, if we zoom in on this, again, it is right at a place. So we're going to be watching this over the next week or two to see if that actually starts turning up. Okay. So very interesting there. All right, let's take a look at just a regular chart on the NASDAQ 100. And we'll put that up here. We'll just take a look at the NDX. All right, very similar to the S&P 500. Again, the 50-day moving average is looming here. The Fibonacci's are about the same. We don't have to do it, but there is some support Fibonacci-wise prior to the high in July and August, right around the 50-day moving average. So that might be something that some traders are watching. Let's just see if it broke the shorter-term moving averages as well. And we are actually right at the 20-day moving average right now on the NASDAQ. So it's acting a little bit stronger, okay? And then let's look at the seasonals on the NASDAQ. I'm not going to show you that. It's about the same. But where the seasonals are different is on the Russell, all right? So let's take a look at the Russell. And this is certainly weaker than some of the other ones, right? We've taken out all these moving averages. Let's go to the longer term ones. We're right around the rising 50-day moving average, and we were right around the little handle in this deep cup formation here. So that could provide some support. But as I said, the difference is a little bit different on the seasonal. So the way we're going to do that is go back to this chart here. I'm going to do the way you do the seasonals, if you're not, you go to chart mode standard, then you go to seasonality. Okay, if you don't know how to do this, and then we'll put in the Russell. All right, and you can see here, all right, so here we are, the 12th. It also has a deeper correction, right? But it turns around before the end of the month historically. So just keep that in mind. But you can see we're doing seasonally here, and so we're in a kind of a couple weeks here in the market. So just keep that in mind as well. All right, now let's take a look at sector action. Number one, over the last year, and number two, over the last month. All right. So the way we're going to do over the last year here, I'm going to maximize the cell. I've got a little layout built here that'll show us all the sectors. All right. So this is for the last year. The green candles is the S&P 500. So the outperformers over the last 12 months have been technology, communication services, and discretionary. All right. But in the shorter term, it's looking just a little different. So the way we're going to do that is, I got this from one of the fellow coaches. We're going to just look at all 11 sectors in the S&P for the last month in one view. All right. All right. So what do we see for the last month? Well, energy down 0.6. It seems to be in a shorter term downtrend. Consumer discretionary is having more of a pullback. It's down 1.14%, also kind of in a downtrend. Real estate here, these are financials are only down 0.5%. They're going down a little bit, but vis-a-vis the amount they pulled back, it's a little bit stronger than some of the other ones. Consumer staples, we're seeing some rotation into consumer staples. Okay, I'm going to show you how to pick that up. But some technical traders think we are seeing that. You can see it's down about the least of many of the sectors here. Healthcare also. We had mentioned about 2 or 3 weeks ago, we saw some rotation into healthcare, and that seems to be continuing. It's one of the stronger sectors. What is getting hit? Real estate over the last month. Look what the interest rates are doing to real estate. Okay, so there you go. All right. Now, we have a question. Where are you getting these charts? These are just chart grid. I can put it in the chat if you want it. We can just do this. If you want this, I'll just share this. Again, this will probably work if you're using Thinkorswim, the Schwab version. It may or may not work right away. If you're using the TD Ameritrade Thinkorswim. So I'll call this sector share. All right, I'm going to put this in here for you if you want it. I find it's pretty interesting and kind of helpful. I didn't think of it, but I'm very willing to borrow some good stuff from somebody else. All right, so it's in the chart there. Now remember, you don't click on the link when you get links that are shared on Thinkorswim. What you do is you go to the top of the program, the very top, click the little gear icon, and then what you do is open shared item, and you put the URL right in there, okay? Some people click on it thinking it's like a URL and they get a 404 error. It's not that type of link, okay? All right, the other way, so this is one way to pick up sector rotation. Another way, all right, is I also got this from somebody else. These are relative strength in different time frames, all right? And what I have here is all of the sectors, and just to show you in a general way how to pick up sector rotation, at least for some traders, is just see the different orientations in different time frames. So 63 days, that's about a quarter. So the strongest sector was information technology, then financials, then healthcare. Then for the last month, let's see if there's any change for the last month. All right, information technology still hanging in there. Communication services got a little stronger. Healthcare continuing with strength. Let's see where staples are, though. All right, so back 63 days ago, staples was 1, 2, 3, 4, 5, 6, 7, 8 from the bottom. Over the last 2 weeks, staples is number 4. Over the last week, staples is number 1. So does that feel like there's money moving into there or out of there? Yeah. Might not last, but that's what we see now, right? All right. So why don't we take a look at just a couple of those sectors more in depth? So what I'm going to do here is I'm going to change my layout again. All right. And then we're just going to use this chart over here. I'm just going to maximize that. Open up this little thing here. And let's just take a look at staples. All right. So what do we see here? Let's zoom in. Well, we're still in a longer term downtrend, right? These highs are still less than here. But on the shorter term, we do have looks like an uptrend going here. We're above all the major moving averages now as well. This is the 200, all right? This is the 50. This one is the 100. So we're above there. And we are actually only down a little bit today where the market's down quite a bit more. So that's looking much better for some technical traders. Now, some other technical traders might be interested in waiting for this big break at this longer term trend line. Obviously, the more confirmation you want, the higher price that you are going to pay. But we see that in staples. Let's take a look at the information technology. Okay, so this is near the high, right? This is showing strength for sure. As a matter of fact, this was we made a high yesterday actually on the technology sector. Let's take a look at the stocks. So it is off its high, but very good support here on this particular index at 3862. You can see where that comes from. I think these highs here, high there, low there, making that line kind of obvious. And then we have the 50-day moving average come up here. All right. So that will also further make this more support. All right. So we seem to have, let's look at financials now too, because that's showing some relative strength as well. All right, you can see it's near the highest it's been here. A little bit of a sell-off, but typically some traders also feel that historically financials tend to do a little bit better than some other sectors in a rising rate environment. It's not always true, but it is true sometimes. And maybe we're seeing that here. We are selling off a little, but let's go to a shorter term moving average and see if there's anything around there. Now we're still below the 5, the 10, and the 20. So it looks like the 50 would be the next major moving average that we would need to keep track of there. All right, so we got kind of three strong sectors, right? We have healthcare, we have financials, and we have staples. Okay. All right. So what I would do, now we have a question from Mike here. Is there a way to look at the fundamentals of an entire sector if the movement is purely technical, if there's some change in fundamental? I would say if you are, you go onto the Schwab website, it gets updated every couple weeks, Schwab sector view. All it is fundamentals. So it'll go over pros and cons of each sector. All right. It's on the main page. When you go into schwab.com, you go to, I can't show it now because I'm not logged in there, but you go to the main, you just log into your account, go to research, US markets, and then the Schwab sector views is down on the right side, a little bit down, and that'll be a fundamental take on all of the sectors. We look at the trading things here on our Thinkorswim. Okay. All right. So what do we have? We got those three sectors. Do we want to look for some stocks in those? Well, we could. All right. So let's go. We have another question. Are the other charts you are showing in the workplace link? It depends on which link. If you want this layout, then I would have to share this particular layout with you if you want all of these charts. This layout will also include the relative strength measurements over here on the left. So I will share this with you. So we're going to go to share workspace, and it's market and sector. All right, share, and I'm going to put this. Again, remember, you open it through the open shared link. I also have a lot of these on my, the notes. When you look at the archive for this particular session, you'll see a lot of these down under the notes as well as links. So you have access to them as well. All right, so now we have to look, let's look for a stock here, okay? So let's go to our scan tool. Now, for those of you who have used Street Smart Edge, the Schwab trading software that we are transitioning over here to Thinkorswim, there was a very good screen on that. That was a pre-built screen. What I did is I just copied it over here. All right. It was called Uptrend Breakout with Increasing Volume. So it's a good way for some traders to look for relative strength if you're screening in the right place. All right. So let's just go over how this screen is set up, just so you understand it. And again, this will be under to the notes for the archive view if you want this scan. But what it does is simply looking for stocks that are generally in an uptrend, have had a volume come in the last week, and are making some sort of high where the momentum, all right, is stronger than it has been the last couple of weeks. So how do we put all of those thoughts into a scan? We just say the 15-day moving average is greater than the 50-day moving average. That gives you an uptrend in that particular time frame. For momentum picking up, we said the momentum for the last 10 days, as measured by the RSI, is higher than the momentum for the last 30 trading days, which is about 5.5 weeks. And then we also said that the volume, the average volume over the last 5 days, is greater than the volume over the last month. So maybe we're getting in a little bit of a volume push on these. And then I just said I want something over making a 20-day high. So what we can do here then is let's look for staples and see if we get anything. So we're going to go here. We're going to scan in the S&P 500. And we're going to intersect that with staples. All of them. All right, let's see if we get anything. Yeah, we get one, Church and Dwight. Okay, so let's take a look. Well, there we go. Made a 20-day high today, backed off a little bit. We got very good support here at least some traders might see it because of these confluence of all these highs, right? That was resistance. Now we broke through resistance. Those previous highs could act as support. All right. And here we go. Now, some traders would say it's at 98.71. There is resistance of the old high up there at 152. Some traders might say, I'll take it anyway. Other traders might basically say, maybe I wanted to take out that high. So that's certainly one. Let us also look at financials, right? And then we'll decide maybe which one to do. And then we'll answer some of your questions also. All right. So let's go ahead and take a look at, we'll just change this from consumer staples to financials. Everything else is the same. Okay. We got one there. CBOE. Okay. CBOE. Let's take a look at this one. That's the exchange, or one of them. Now this looks interesting. Did we get what we wanted? Well, yeah, you can see we're basically in a nice uptrend. We made a 20-day high. Let's zoom in here a little bit. So we are kind of breaking out here, it looks like. We have a pretty good area of, now we had all these highs, so this was resistance. Now that resistance could act as support. So for some traders, maybe would like to put a protective stop under there in case it falls back into the range. Maybe they don't want it to limit their risk. What would be a potential target? Well, you could consider this to a certain extent a range, maybe, if we did this. And, you know, one technical analysis rule of thumb doesn't always work, okay, is the height of the range. So 168 to 183 is about, what, 17 or 18 points. So that might be a potential target. Other traders take the view, let's go to a 3-year weekly chart just to double check that there's not longer term resistance up there somewhere. All right, so let's do that. So I'm just going to change my time frame here to 3 years weekly. And we see that there is no overhead resistance. So the question becomes for some traders, would you put in a target if there's no overhead resistance? Some traders would say maybe not, because it's a breakout. It could do what this did when it broke out, just kept going. So maybe that's what we might want to do for our trade today. So this looks a little bit stronger than Church and Dwight, simply because, at least for some traders, because there is no high above where we are now that could potentially act as resistance. So if we were going to do this for our trade today, then how would we do that? Well, we can just right click in the chart and we want to buy, but we want to do it with a stop at the same time. Okay, so we would say buy custom with a stop. Okay. All right, so here we are, and just going to move this over a little bit. All right, so in this particular class, we don't try to put much more than $5,000 into any trade. So it's at 160, 170, so that's about 30 shares, just roughly. Okay, so let's do 30 shares. Be a little bit more, but at least shares will be about right. All right, if I click this little link here, it will automatically, okay, link those two together with the amounts there. You can see it did that. All right, so it is a breakout. Perhaps we could just go ahead and buy it at the market. So we'll change this to a market order. Now, where would we put our stop? Okay, we saw the breakout level was, let me put this down here for a second. All right, so 183.31 was the breakout level, right? So we could put our stop maybe at 182, something like that. So let's go back to our trade here. We'll make this at 182. All right, and we might want that stop to be good till canceled. All right. Now, would we get 182? It's a market order, remember, stops. So, we could get that, but it will get the next available trade. So we don't know exactly what we're going to get on a stop. All right, so here is our potential trade. We're buying 30 shares of CBOE based on our market and sector analysis. Given the fact that the McClellan oscillator is a little bit below zero, we could say maybe we won't do the full amount, but since it is breaking out, okay, maybe we'll go for the full amount. But that's how some traders might take the negative signal from the McClellan oscillator and change maybe their approach just a little bit, maybe cut back on the shares or something like that. All right, so we don't know exactly what we're going to get when we buy it because it is a market order. And our stop, we're setting it around 182, but again, it'll become a market order there. So we'll try to keep that in mind too. We might not get 182, and then we will send this order. All right, so we bought it. Let's go over to our monitor here for a second. All right, so these are the other trades that we've done in this particular class. We're up a little bit. You can see we moved in here with This was healthcare. This was Stryker. Okay. We got stopped out of this with a profit in Vesco. Okay. That was in financials. And then J&J, we're still in and we're basically even on that one. So now we have an unallocated one. If I want to put it into the market and sector area, I can just open this up and move it to a group, which will be our market and sector analysis group. All right. And now we can keep track of that. All right. All right. So let's just review what we talked about. Number one, we looked at the market and we saw that the longer term uptrend might still be intact. We're having a little weakness by some of our indicators there. We're going to keep an eye on our VIX signal to see if that changes because it's flattening, although it hasn't switched. And we'll just keep an eye on some of these trades as well. We still have strength, it seems, in healthcare. Also, financials are holding up okay, as is information technology at the moment. So those are some stronger sectors. Okay. The final thing I want to do is just show you really quickly. Somebody want to know where the archives are. There's two ways to get to the archives if you want to review this. So if we go here to a browser, all right, and we just go to our main calendar page. If you don't know, it's schwab.com, either /live or /coaching. Either one will work. Okay. And then if you want to see or review any of the classes that are on this calendar, for instance, let's just look at, here's one I did on a couple of Fridays ago, right? Just click on it, any class you want, click on it, and then on demand, okay, you would click here, and this will take you over to the YouTube, all right? And this is where you can watch everything. And again, under here, all right, is where I put a lot of the scans and the layouts and all of that you can use as well. All right. So there you go. So thank you very much for your kind attention. We're right at time. I want to thank Cam for handling the chart in a nice workmanlike manner. So thank you so much for that. And I hope to see you all again on another webcast. Thank you much for joining. Take care now.